Hello, Richard.
How are you doing?
It is recording. Okay, good. All right. So if everybody wouldn't mind, other than Greg, muting themselves. And if you have questions while Greg is talking, you can put them in the chat. That makes it very handy and easy for me to ask you to unmute yourselves after he's done his presentation and ask the questions. And this actually works pretty smoothly. So this is a slightly unusual type of forum. That's not the sort of usual fact-giving stuff. This is about, basically ethical investing, right? So Greg has been a qualified investment manager and financial planner since 1993, and he earned accreditation as an AIF, an accredited investment fiduciary, in 2003. In that role, he helps clients find socially valuable ways to invest their money in ways that match their values, social, political, environmental, and so on. In addition to steering his clients into investment strategies that might help green our world or promote social justice, he himself puts his own money where his mouth is and puts his own efforts where his mouth is too, by being a great supporter of socially and environmentally conscious local enterprises here in the Low Country. For instance, he's a fundraising committee member of the Low Country Local First. So we're already a little bit over time, so I'm going to cut my introduction fairly short today and just simply hand over to Greg Garvan. Thank you very much, Greg, for being here, and welcome to the Unitarian Church's Forum series.
Thank you, folks, for having me. I know a number of you from other worlds or from other UU things. My name is Greg, and this, I hope, is a little bit more of a conversation than a lecture, but I've run a company with a marketing name of Money with a Mission for about 30 years, and I am registered with a company called Natural Investments. And if you go to either of those websites, you can find out more if you want and all that. I'm a little reminded this morning before I get going, I usually go to St. Stephen's Church, and they were talking today about doubting Thomas. And I was reminded that really, if there are any doubting Thomases out among the crowd, that's great. I am not here to convince you or to make you produce your card that says you're this or that, but I'm just trying to share a story that I think is important and I hope gives people some pause to think about not only specifically our investments, but how we're spending our time and energy and even local money. So we'll talk about banking some and stuff like that. Excuse me. So the first thing I want to do is actually tell you two stories. One is a client, a man I've known for probably about 25 years, who I love dearly. He's a part of a gay couple that they've been together almost 20 years. He's an activist and very involved in trying to change the world. And one of the things that I always find funny about him, and Libby and I were talking a little bit about banking earlier this morning, and one of the things that I find funny is he still keeps his main banking account at Wells Fargo. And no slam on anybody that's keeping their money at Wells Fargo or anywhere else. But for us in the SRI world, one of the things that's frustrating about a bank like Wells Fargo, just to pin an easy issue, is something called redlining. And I assume most of you are familiar with that. But basically, it's the precursor to the subprime mortgage. And it's the ability to really go in and target poor neighborhoods. And Wells Fargo was taken to court back in the late 90s, 25 years ago, for doing this. And off and on, it continues today and all that. And I have conversations with him that say, you're so committed in all these different areas of your life. How come you won't change your bank over to some little local bank in the community you live or something? And he says, well, it's so much easier because of the international scope and da-da-da-da-da. And that's all true. And that points to another story I want to tell you, which is a family we've known for a number of years. A few years ago approached us about would we want to talk with them about managing their money. And we said, sure, and we had some conversations and went away. We had some conversations. And finally, they said, we've looked at your performance and we've looked at the performance of the people we're using now. and you guys are shy a couple of percentage points over the time. And I said, not a surprise at all. I mean, you know, you compare things and you're going to be a little better or a little worse. You're never going to be exactly the same. They said, well, for us, that just, you know, we think that's important. We need every percentage we can get out of this return. And we said, that's fine. But I walk away from that a little bit frustrated with the sense that for when we talk about socially responsible investing, we are not talking about just a performance return. We're talking about how does the investment perform, but we're also talking about what's the community impact of this and how does that factor in things. And we're also talking about something called proxy voting, which means voting accountability as an owner of shares in a company. So I'm going to talk about all that stuff later, but let me get into the weeds a little bit. I don't know, can you all do that little thumbs up thing of how many of you are already fairly familiar with social investing? Most of you, some of you. Okay, all right. Because you know, I don't want to talk down to you. So let me just go through a little bit of how we come to be here and what that's about. Social investing actually goes pretty far back, starting principally with Quakers. And Quakers saying there are reasons we don't want to invest in certain kinds of companies. And in the 1900s, that becomes a bigger deal. And especially as we get into the 1960s and the 1970s. And in 1971, the first SRI mutual fund, Pax World, opens. And that was opened by 2 Methodist ministers and a financial person. And that's still going very strong. It's one of the biggest funds in the SRI world and all that. As we went further in the 70s, we got into South Africa and the divestment movement, which some of you may be familiar with, but the idea of if you're a company making money in South Africa, given the racist regimes and stuff that were happening then, basically people were voting with their feet and saying, you know, I want your company out of South Africa as long as the political structure stays the same. And that really becomes the sort of flame or the big light that really gets a wider world going around the idea of connecting your values to how you invest your money. And we look at 2018, that was up to about $30 trillion, trillion with a T, and in the world that's invested using social screens. Just for comparison's sake, when you look at the whole of the S&P, the Standard & Poor's 500, which is a index that's often used in this country as kind of a bellwether of if you had a array of stocks, that would be a good index to be in. That has about 25 trillion. So social investing has come a long way in a few decades, and it continues to make more and more of an impact. If I was going to slice this into quick pieces, one of the terms you might hear today is something called ESG investing, which is environmental, social, and governance. Or another term you might hear is called impact investing. And I'm going to try and put those on a spectrum. If you talk to your advisor and he or she says, well, you know, we're doing some ESG work and, you know, yes, we can help you with that. That's great. Typically with ESG advisors and work, what you're really focused, what question? I don't know. What happens with ESG is it's primarily focused on the return and the environmental, social, and governance factors that go into that, but it's really looking primarily at performance. When you look at somebody who says they're an SRI investor or advisor, typically we're all in. We're looking at the financial and social stuff. We're looking at community impact and community investments, and I'll talk more about what that means in the real world in a minute. And we're talking about proxy voting and doing the activist voting stuff. The other side of the spectrum is impact investing, and that's principally when someone, for whatever reason, whether you have $100, $1 million, or whatever, you say, I care less about the returns. I'm really interested in trying to do social change work. So I want to find companies and investments that I think are really going to change the world. Does that make sense so far? Thumbs up, thumbs down? Yes, okay. So let me talk a little bit about, well, let me say a little bit more about the ESG thing. We are very grateful that almost 20 years ago, the institutional financial structure basically started taking social investing more seriously and introduces this ESG term. What that means is if you walk into someone's office and you say to your advisor, I want to invest in pigs in space, what that advisor is going to do is not only look at the pigs in space financial numbers and what that looks like as an investment, but they're also going to look at their ESG scores and say, how does this company do on the environment? How does this do on social issues? How does it do on governance? And you might say, well, why do I care? I just, I'm trying to make a buck. Principally, you care because it affects whether you make a buck. One of the things that is very obvious now after decades of research is that how a company performs environmentally makes a big difference in terms of how they perform financially. So this isn't about just, I'm an old hippie, so, good for all that stuff. But, it's not just, I want to feel good about this, but it's really, we're making money and we're trying to make money in a very practical, but values-based way. So that's really how the ESG came to be. And that's why it's become more and more popular today, because if we took a spectrum of 100 people that said they were doing, this kind of investing, the majority of them would skew towards, I want performance and I want it with the ESG scores, and that's great. Socially responsible, the SRI investor, which feels like at times the old hippies folks, like myself, really look at this in a bigger picture way and say, I want a portfolio that's not just doing the investing, but also is putting money into what we sometimes call TCI or targeted community investments. One of the things right off the bat is these are not money makers. These are typically like a bond or a CD. It's going to have a below market return. And its purpose is to do things like, I'll give you an example. There's a company called the Self-Help Credit Union, one of the larger ones in this country. And they run CDs, certificates of deposit, that specifically fund rural businesses, that specifically fund women, childcare centers and things like that. So we think it's important to have some of our money in that kind of thing, even though we know we may only be making 2 or 3%. And then the third part, this proxy voting. Proxy voting, for any of you that own a mutual fund, you probably have seen the little statement you get once a year that says, please vote for the directors and for this or that. And oftentimes there are social questions in there. And we have used that over the decades as a way to promote social change, to encourage companies to look at how can you do better? And I'll give you one of our older stories, and I love it because the company that really was the main impact of it is still around. But in the late 90s, Home Depot was the largest purveyor of old growth forest wood. And for people in the environmental world, that was a growing concern as we lost more and more of that wood, that Home Depot wasn't offering alternatives to that. There's a company you may have heard called Trex, T-R-E-X, and I'm not recommending it or anything else, but it produces an alternative recycled plastic type wood. And they worked with us, and then we all went as shareholders of Home Depot and basically started a conversation that over time saw Home Depot not only agree to cut back on the old growth forest, but has been much more of an advocate on using recycled materials and all that. And to us, that's a success story because it changed what was doing and improved environmental aspect. It's not always perfect. We don't, in fact, most times we don't win, but it is a way of introducing conversations with companies and trying to get them to engage in ways, especially when you go as a shareholder and say, we own shares in this company. We're not trying to pull you down. We just think there's a better way to get there and stuff. So let me hush and see if there are any questions, and how do I, let's see, I go to chat.
What was the name of the one that invested in rural businesses?
There's a credit union called Self-Help Credit Union. The original one is actually based in North Carolina. I'll tell you another story about that in a sec. But Self-Help Credit Union, something to look at. I want to be clear, I'm not advocating for any of these things, but just trying to tell you stories of different companies that have different things. One of the coolest things, sorry, go ahead.
I would say the impact investing seems to me to be the equivalent of donating to a nonprofit. The worst case is you won't get any money back. I donate all the time to conservation voters. I'm never going to get any money back, but I'm doing it because I care about what they do. So if you can maybe look at this as, this will be great because I'm probably going to at least get what I give away back. So it is comparable to that in many ways. It's just different ways of influencing what's going on in the community in a constructive way.
I'm going to split a hair because I'm a financial professional.
Yeah.
I have to do that. If I decide to give $100 to women-owned business, nonprofit thing set up, you're right. I've given that money away. I get a tax break. Bum, 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 bum. If I decide I'm going to invest that money with the company, then even if I never get a return or I get back a 2% return, you're exactly right, Libby, that we would say that was a positive community impact thing. And we think that's good. But I do want to make it clear, our intent is not to give the money away at that point.
Right.
But because when you're investing in a certificate of deposit, there is at least the intent, and 99.9% times it happens, you're going to get that money back. It's just, you're not, it's like almost a no interest loan type thing. So
yeah.
Glad to see your endowment has over 40% in ESG funds. Go get them. Walden is one of the very old Boston-based mutual funds. We've worked with them for years, and you probably know your national headquarters is in Boston, and I know actually some of the people who used to be on that board. So yeah, great stuff, great stuff. Okay.
With a hand up, Emmy's screen, but it's Emmy's husband, I think. You'll have to unmute yourself though.
Okay. Hi. Can you hear me?
Yes.
Okay, good. I'm Steve, and I didn't retire as a stockbroker, but I was one for 10 years with first H.E. Edwards and then with Raymond James. One of the things I used to tell my clients was, for example, if you wanted to buy a particular stock that made weapons, I could not tell you you couldn't buy that stock. I would tell you, you buy it, you watch it, you decide. I will not follow the stock for you. I do not do weapon stocks. Washington Mutual at that time was one of my favorite mutual funds to use. But here's I guess my question is this. Boeing. Would you recommend Boeing? Because they made some of the biggest new weapons we have to put out there to destroy the lives of human beings. And see, I think that this thing becomes much more serious because what one man's socially responsible investment becomes another person's way to rid the world of evil. And I find that difficult.
Sure.
I think we're getting better in some regard. For example, I do a couple of infrastructure ETFs right now. That's what they're involved in, is infrastructure. We just had a new UIT that came out that involves cloud investing and also cybersecurity. So I think that trying to decide, I'm 73. I'd like to donate. I still do, I think, some because of how I try to pick it. But I didn't retire I retired as a pastor. Okay, so I'm an oddity. Don't have megabucks.
You're a gem. You're a gem. Sorry, go ahead.
I'm a weirdie. But because I also manage a casino. So, you know, I didn't have any problem doing gambling stocks. That was what people wanted to go out and spend their money on. Go for it. But I wouldn't do tobacco stocks. And that became more and more difficult because of the way tobacco diversified itself into the food industry. And I think socially responsible investing is extremely, extremely important. I guess my question or observation, I think it's becoming more and more difficult because how smart some of the questionably I hate the term sin stocks, because when one man's sin is another man's ultimate pleasure, you know. But I think the weapons, I think the fact that we're putting stuff out there that is harmful for people to eat, to drink. That's why I never did a tobacco stock. I don't even care when they diversified into food. I didn't do it. But again, my problem, as I told you, as a investment advisor, I was not going to tell a person that called, I want to buy some RJR. I want to buy, and I would say, I can't tell. Yes, you give me the order, I'll write the ticket, and then you're responsible for it. I would not follow it. I would not give them any advice on it, but I did not feel it was my right as their agent or whatever you have. I had unique relationships with my clients, and this is not bragging, but as I moved down toward the end of when I left, seriously, if I made 10 phone calls, I wrote 9 tickets. And it was because my clients knew I wasn't selling. I was managing, I was servicing, I was caring for and I was a broker during '87. So I saw the worst of everything.
Sure.
So how do you find that balance? Because if you don't know and really read the prospectus, you do not know everything that is in that particular, whether it be an EFT, whether it be a UIT, whether it be a mutual fund. It's getting to be tough because they find ways to hide stuff, I think.
So
I'm sorry.
Let me take a shot at that. And thank you for sharing that. You've had quite a remarkable story there. I think the good news is technology, frankly, I mean, given I've been doing this since the 80s, technology has made this much easier to know what's going on and what's not going on. In terms of, knowing what's in there and what you will be investing in, transparency is all over the place. And to me, that's a gift. Are we perfect? No, we're not. We're not there. We're not anywhere near there. You've mentioned Boeing as an example. We would never invest in Boeing because of their defense profile. I mean, that's plain and simple for us. Not for everybody. I don't know if you heard my Doubting Thomas story in the beginning, but I mean, we are not for everybody in terms of what we do, but we are very clear about things that we will not invest in. So let me just take 1 minute and do a quickie of sort of how we march down that line. When we're looking at investments, whether it's a company or a mutual fund, there are certain things that we just exclude. You mentioned tobacco, defense, we certainly do, bad environmental records, alcohol. Now let's have a timeout for a minute. Alcohol is this fascinating thing because, if we go back to 50 years ago and Coors and the anti-union work and that kind of thing, there were some reasons why big alcohol and blah, blah, blah wasn't appealing. Well, now we live in the world of, I can't think what they're called, all these little mini brewery, local companies, da, 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 da. And we have clients all over us saying, how come we can't support the local little brewery, da, 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 da. And, that has become a very seesaw-y kind of thing. I would not say at this point that for all our clients, we absolutely do not invest in alcohol anymore because of those small microbreweries, I think is what they're called. But so, the world changes in terms of that. The kinds of companies we want to include really goes to the social change stuff. How do we find companies that have strong environmental standards and records and that kind of thing? How do we find companies when we look at women, people of color, LGBTQ stuff? How do we find companies that aren't just hiring people, at the line level, but what does management look like? What does the board look like? And really trying to dig deeper to say, it's one thing to say, yes, we're an equal opportunity employer, blah, blah, blah. but where are you putting your money where your mouth is when you look at management and a board and that kind of thing. So there are a lot of different ways that we look at this, and to say it's never going to be perfect, but we just make it clear that these are the kinds of standards we use. And one of the things you might want to go look at just for, grazing purposes is Natural Investments on the website has something called the heart rating. And they use that, and it's laid out very clearly. They use that to talk about, for the different mutual funds, how strong we think they are in terms of these overall ratings and that kind of thing. So that gives you some idea of some of the things.
Is there a similar source where you could, if you own individual stocks, where you could look and see how evil your stocks are?
No, not that I'm aware of a retail investor. We have some, back office things that we've used. A lot of it at this point, and you think it would be better done, a lot of it is still done individually by different firms and stuff. So we have someone on our staff, for instance, at Natural Investments that does most of that work.
Thank you.
Other questions, comments?
Look, Greg, at where people pay taxes and whether they pay taxes or whether they shield their taxes?
Sure. Social investments are no different than any other investments. Most good financial advisors in this day and age use something called tax loss harvesting. Again, it sounds, I don't know what it sounds like, but all it means is typically if you're working with an advisor, or if you're doing it yourself, you can do it. Well, harder to do, but you can do it. You want to find out late in the fall what it looks like the capital gains distributions are going to be from the funds you own. And at that point in October, November, December, you can then sell off some losses to try and mitigate that and wind up with, neutralized type things. If that's your question. Is that your question, Simon, or did I?
No, I was really kind of thinking whether the companies are actually, themselves actually being socially responsible and actually paying their taxes. Or whether, yeah.
I'm going to give a blanket comment, and I never give a blanket comment. And I'm going to tell you, well, okay, it won't be blanket. Most of them in my book, and I ran a tax business for 25 years, most of them are not paying taxes in a way you and I would think they should be. And that goes to really the heart of, again, Libby and I were talking about this earlier. In 1980, basically, when Reagan came on and started the trickle-down economy business and changing the tax law, really the last 40 years, our tax laws had gone from focus being on corporate taxes and smaller income taxes to almost completely the opposite now, where the smaller income tax thing and corporate taxes, in my point of view, are a joke. I mean, the number of, go look at like the top 20 biggest companies in this country, and how many of them are paying zero, nada, nothing in taxes. It is disgusting. But it's also a reality that says, gee, I'm running a business, and whether I'm running, a Ford bike here in Charleston or Boeing, I have a tax code to deal with. The tax code lets me get away with this stuff. That is not to me an investment issue as much as it's a Congress understanding that at the very least, to me, it'd be nice if we had some equal balance. And we really, if you look at the last 100 years, we've just gone from mostly corporate taxes to now mostly individual taxes.
Steve has another question for you.
Yes, sir.
So Steve, unmute again.
You're still muted, Steve. Can't hear you.
Okay,
Now I can.
where is Jesus when I need him to heal me? It's not a good thing.
Right there
Couple
next to
quick,
you.
an observation and a question. I don't know how you feel about cannabis stocks. I know
Great
that
question.
there is a wonderful ETF out there. The symbol is MJ, Mary Jane. And I personally believe in cannabis. I think it is needed, especially medical. I think I did extremely well financially, but I really believed in the company, GW Pharma, that had the first and only FDA approved CBD drug for epilepsy. So I felt like it was a great company to own because I believed in what they were doing, and the company did exceedingly well also. One of the things that, and I won't, that's a question, but an observation, I think we have a chance with Biden because you can buy, for example, EV, electrical vehicle type stocks that are going to be extremely good for the environment, I believe. And I think that Biden and his infrastructure plan that he's going to be trying to put out, we got some battles to win, no question. But I think the opportunity to invest in not only socially responsible, but financially possibly good investments and do a good thing for the country, the world. I think we have to be careful because some can be disguised. I think the opportunity for green type investments may be the best that we've had, and we better take advantage of it because it won't last. But that's just my observation. I have found some of these that have been extremely good returns.
Okay.
Makes you, like I said, when we own, I finally sold GW, but I just felt so good that I found a company that was going to be helping with epilepsy and more, a lot more. And yet it was a very profitable investment. And I think you have to be careful how you look for these, but they are out there. And there's some good medical stocks that are doing things very good right now, I think. But I'm curious about your cannabis.
Yep. And I'll be very clear about it. We still live with a federal law and a state law dichotomy. And
yes,
at least to date, we as a company, Natural Investments, have chosen not to invest in the cannabis industry. I'm not saying you don't hear stories like yours, as well as stories of people who got taken to the cleaners in these deals. So I think they are way off on the risk spectrum, and you should pay a lot of attention. But
yes,
we've chosen, at least so far, that may change with the Biden administration, but so far we've chosen not to invest in those companies. Let me take a swipe at the EV question, though, the electric vehicle stuff.
okay.
I think that's 6 years ago, we stopped investing in any oil companies, and there's a subsector of this world called fossil fuel free investing. And
Yes.
that was a decision that our company made. And so no more gas and oil companies since 2015. Basically, electric vehicles come in two flavors right now. They're the big companies trying to figure out how to do this and make it right. And so you're doing a filtered play because they obviously have other cars that they're still building and all that.
Yeah.
And then you have these smaller, really, I mean, beyond Tesla, but startup and kinds of things. I think those are all interesting, but I'm also, I'm known as the wet blanket, and there's a good reason for that, I guess. But electric vehicles, and I've had a Leaf, I had a Prius for 14 years. I mean, I'm all sold personally. Professionally, we've got a long way to go. And part of it is we don't have the infrastructure to support. I mean, suddenly we had a gazillion EVs out there running. We don't have the infrastructure to support that. And I think there's going to be some big headaches along the way, not the kind of stuff we've seen in the last 20 or 30 years about stop and start and figuring out batteries, but about how do you take a mass movement basically and lay it out on this country or other countries. But in particular here with the driving range and stuff like that, I think we have a long way before there's some big leaps in that. I think we'll keep doing the incremental growth, but so that's my 2 cents on it.
I'm still open to so one last quickie. Cryptocurrency.
I'm woefully ignorant. Sorry,
Okay.
can't help
Hey,
you
we
with
all
that.
are.
Well, I mean, again, we have chosen not to invest in that. I hear all the, Las Vegas stories, but that's one I am woefully ignorant on. So one of the things, though, that I triggered when you're talking about I guess, about the cannabis stuff, but I was thinking one of the things we do invest in more and more now is organic farm stuff. And I was thinking about hops and microbreweries and things like that. And again, it's an interesting kind of ma and pa world, much like the cannabis farmers that I'm aware of. You know, they're doing small scale things. Some of them have ramped up to larger stuff, but there's a lot of tiny business. It's not even small business, but tiny business kinds of opportunities that are out there. And yet typically we hear about that through a word of mouth or something like that. They're not running advertisements on TV or things like that. And I would just urge you, when you're offered those things, pay a lot of attention, because sometimes, you know, it seems like solid stock and seems like that was a bad choice of word. It seems like a solid idea in the person who's executing it. But oftentimes we get a lot of restaurant and food ideas, and by and large won't go near them. The fail rate is awful. You know, typically people, they'll go a couple of years with that, but it doesn't have long legs. So I would just say be careful about that. How are we doing on time, Simon?
We're good. It's 10:38. What about big ag, Greg? Do you shy away from?
You see my eyes rolling up in my head. Yeah, we're not a big fan of big ag. There's a lack of environmental responsibility and the whole GMO issues, and so it's not been something
So you're
Are
not
there
impressed by the
Oh, sorry.
arguments about economies of scale and providing masses of food for starving millions and things like that?
Sorry?
But you're not impressed by their arguments of economies of scale and being able to provide, you know, huge amounts of food more efficiently than smaller producers?
I'm impressed.
Poison food.
Yeah, I'm impressed with the argument as a conversation. I'm not impressed with the reality of making that happen in a global aspect, if that makes sense.
Kill the family
Right.
farm.
Greg, are there anything like an ETF that buys all the solar stocks? So it takes
Yeah.
advantage of that, spread your thing, but focus on a subset like that. Does that exist?
Say the question again, because I think it does, and I'm trying to get the name right.
Okay, an ETF, which
Yep.
generally buys all of some
Right.
market.
Yep.
Are there ones that would say they're going to buy all of the solar stocks out there? The ones where solar is a significant enough play in that company that you feel like you're investing in solar?
Yes, and I apologize. I'm spacing the name. So I don't want to just throw out something that's close.
Yeah.
I will send to Simon the name as soon as we get off the call of that. But yes, there's an ETF that's been around doing that for a good while, and that's a pretty decent track record.
Oh, good.
So yeah. Let me take one shot, if it's all right, at community banking. Is that okay, Simon? Or
Yes, please go for it.
all right. One of the reasons I told you the story in the beginning about my friend who's such a great everything except for he banks at Wells Fargo still. One of the realities is, with banking being the techno reality it is today, any of us can go to almost any bank anywhere and get pretty close to the same services. So one of the things we've really been encouraging people to do, and actually I will send Simon this website too, I think it's called Better Banking, but is really encouraging people to look at using credit unions, because credit unions and banks, if you're not clear, banks are for-profit institutions. Some of them are in the community. Most of them are big regional or big national or international banks. Credit unions are nonprofit, member-led organizations, and we feel very strongly that as social investors, to be involved in the banking through the credit union is an important thing. So we're in the middle of a campaign trying to encourage people, to consider looking at their local community banks and within an area, to look at the credit unions and to consider, why wouldn't I bank with a smaller local bank or credit union? especially if I could be part of a member thing and have some vote and some say in the way they're run. So.
It
So
seems
that's my
like the
move.
community banks just get bought up by bigger banks. So they
Yeah,
don't,
You're
because I've gone
absolutely,
through a number of them.
you're correct.
And they just go away and
Right.
become something else.
Right.
But
Credit
credit
unions are
unions
better.
don't tend to do- Yeah,
Yeah, they're nonprofits. There's
right.
not
So
the
they're
same
not being bought
incentive.
up.
And there's some good credit unions right here in Charleston, certainly in South Carolina, there's some good ones. Optus Bank, which is a bank in Colombia, but is one of the very few left of African-American owned banks in this country, which interestingly enough, over the last 100 years have had kind of fits and starts, but anyway, they're a good bank. They're still going.
Why do you think, Greg, you haven't been successful persuading your friend to move to credit unions? I mean, you sound quite persuasive to me, but why haven't you been successful with him?
Well, I tell that story and I love him dearly, but I tell that story because I think it's really a story about all of us. None of us is perfect. And I think it is very common that we meet people who say, oh, I'd like to do social investing, but it seems like such a headache and blah, 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 blah. And, I'm still buying the Prius, I'm still buying organic, I'm doing enough things right. And that may well be true. I could tell you plenty of bad stories about me, so I'm not going to go down that path. But, it's none of us is perfect. And that was really my intent in telling that story. I hope the rest of that is, if this in any way sparks anything for you about, well, gee, I could take that one more step of doing something different in terms of my money and my investments. I hope that happens from this, because I'm looking for smaller incremental steps. I'm not looking for perfection out of this. That makes sense? Or
Yeah, but I might actually press you a bit more on that. So, I mean, his argument is that he sticks with the big bank because
it's easier.
It's easier, but I mean, is it?
In my mind, no.
Yeah.
I mean, 10
Their
years
fees
ago,
are higher.
well,
if you just want to get more stuff taken out of your account, that happens easily. Yeah.
Depends on where you are and what you're doing. He travels, or before COVID, he traveled internationally and felt like, I feel more secure, da, da, da. I don't think that premise is true in 2021. I mean, almost any credit union or bank can offer you the same technology services that Wells Fargo, Bank of America.
And you will end up with a credit card through a credit union.
Right.
Yeah.
Yep. Exactly. With the chip, with the security, all that stuff. So.
And more likely some actual person that you might
probably
you'll have a problem, yeah?
Yeah, probably. Well, at least before COVID. I'm not sure how well that's working today, but yeah. So
we're probably about out of time. So maybe leave a last comment or a last question from anybody. I don't see any hands up raised. Steve, you finished? Yeah. Okay.
Great. Thank you all. I appreciate you listening. I'm happy to answer questions anytime down the road, and really appreciate the offer, Simon and UU Church. Onward and onward.
This was great. Thank you very much. And you're getting thanks in the chat from Gail and
great.
There's other people too.
Good
so thank you very much, Greg. Really appreciate it.
Blessings.
Yes, thank you. Next week, we have Cyrus Buffum. So Greg, you're invited to come along.
Cyrus.
Talking about the Gadsden Green situation again and all that sort of stuff. So that should be really interesting for folks. So that's be at the usual time, 10 o'clock, and on the same Zoom address. But thank you very much for now. And thank you very much,
folks,
on the call.
Take care, all.
Thank you, Libby.
Bye now.
Bye. Bye, Bruce's. Bye, Roy. Bye, James. Bye, Karen. Bye, Mela. See you at the big one at the church. All right.